What is going on, my internet family? It is so good to see all of you. In today's video, we're going to cover the top 4 Fidelity Sector Index ETF funds of 2019. This is a subscriber requested video, and I greatly appreciate the subscriber who requested this topic. And I always appreciate hearing your guys' feedback and video ideas you want to hear about. It helps me as a content creator, so thank you very much for sharing that. I'm going to start the video right now, but if you would do me a huge favor, if you enjoy the video, drop a like down below and leave a comment as well. It really helps support the channel and helps this information reach more and more people. Real quickly, guys, I wasn't too happy with Fidelity's website when doing this analysis. Now, this spreadsheet took me a while to make, probably a couple hours, but what I found is that Fidelity has 2 main views when it comes to looking at their investments. You get if you don't have an account set up with them, or you don't have any sort of login with them, then you're going to get a very limited access to the information. If you want to use their research tools and analysis, they actually want you to now create a guest login account. I'm not sure how long it's been that way, but it looks like this. So in order to access the information that you're going to see on the spreadsheet, I had to create a guest login account, which was only good for 30 days, which is kind of frustrating. You have to do that. But if you want to see these investments in more detail, I would suggest you create a guest login account and go from there. We're going to talk about the investments now, but real fast, let me show you how this spreadsheet works that I've put together for you. On the left-hand side are the links that will take you directly to the web page that discusses each particular sector fund. And I've listed out all 11 sector funds right here. If you're new to investing, if you don't know this, is that the stock market is actually made up of 11 primary sectors, and these different sectors encompass each chunk of the stock market. Think of it as a big pie. Well, each sector fund is a piece of that pie that makes up the total stock market. And on the right-hand side, as we go to the right, you're going to notice I have the ticker symbols that you can search each investment, and then I have the average annual returns. Once again, that's the average annual return for each investment from the year-to-date perspective, 1 year, 5 years, and the lifetime of these sector funds, which we're going to cover in more detail in just a little bit. For the sake of time, because there's 11 funds and I don't have time to cover all 11 with you, and nor I don't think you guys would want to see me go through that, I'm just going to be covering the top 3 or 4 sector funds for this video, and feel free to research the rest on your own. But I want to talk about a few of the general things regarding sector funds real quickly. If you're new to investing, I think it's a great way to learn about the stock market. And with the sector funds, you can learn what the biggest players are, or who the biggest players are within each sector of the economy as we go through this, as you're going to see. So it's a great way to not only learn about the stock market, learn who some of the most successful companies are who've been around for a long time, but also you're going to be able to, with sector funds, you can easily diversify your portfolio and manage your risk. Now, for me personally, now this is just me, but what I try to do as an investor is I try to not, whether I'm investing in individual company stocks, which I do, or in ETFs, which I do as well sometimes, is that I never want to invest, this is just me, more than 15% of my total portfolio in one sector. Because in order to be truly diversified, you want to have not only different investments, but you want to hold investments within different sectors. And if you want to really diversify yourself, of course, you would also invest in other assets outside of the stock market. The first sector fund I want to point out for you guys is the Consumer Discretionary Index, ticker symbol FDIS. Year-to-date return, it's about 24%. 52-week return or 1-year return has been about 8%. 5-year return average is 12% per year. Lifetime return is about 12% per year. And just so you guys know, the returns listed here, they're not guaranteed. At any given point, the economy could turn and these returns the numbers could go down, right? There's no guarantee that you're going to get these returns every year, so you have to always keep that in mind. But since we've been in the bull market for such a long time, the numbers on pretty much every sector have been pretty substantial. Maybe except with the one exception being energy, which has been lagging for quite some time now. Down at the bottom of the spreadsheet, I've included tabs that cover each investment. This is all from the Fidelity website. What I've done is I've summarized everything from there and I've placed it all in one easy to read spreadsheet so you can get the gist of all these investments. If you want to learn more about them, definitely check out the Fidelity website itself, or go on Yahoo Finance, or use another investing research platform to access this information. Now, the Consumer Discretionary Index, what you're going to find is that per share of this ETF, it's about $47 per share. Each of these does have a small dividend yield, but it's only about 1%. So it's not huge, but it's something. The expense ratio, I believe, on every single one of these sector funds is going to be about less than 1%, or 0.084. And if I scroll down here, let's see what this is made up of. So this is made up of companies I'm sure you're going to recognize. Its number one holding is Amazon, Home Depot, followed by McDonald's, Starbucks, Nike, Lowe's, Booking Holdings Inc., TJ Maxx, General Motors, and Target. All in all, this one fund owns about 300 different companies. So not only are you getting good exposure to the sector, but you're getting diversification as well. What Fidelity does on their web page is what's pretty cool, is that not only do they talk about the sector, but they give you the industry exposure. So within each sector, sectors are made up of industries. Okay, so every sector is made up of industries. Fidelity also does some sort of analysis. I don't know how they arrive at this, but their short-term and long-term 2-year sentiment is strong. So Fidelity thinks this investment, or these type of companies, are going to do well over the next 2 years, is what they mean by that. Another thing I really like that Fidelity does is that they actually show you on their page who their competitors are. So here's Fidelity right here, and then it shows you what are similar ETFs from other investment firms or other investment companies like Vanguard. So Vanguard's Consumer Discretionary ETF is VCR, and you can see how it stacks up against Vanguard. So this is kind of cool. I like that they do this. And I always recommend, before you invest in an ETF or a stock or whatever, definitely take a look at some of its competitors. It's well worth your time, and you're going to get a better understanding of how that sector and how that industry works. The next sector fund is, I want to look at the Information Technology Index. Information Technology Index has excelled this year, ladies and gentlemen, at 31%. Dang. Damn! 52-week return is about 12%. 5-year return average is about 17% per year. Lifetime is about 18%. And I will point out that I think these sector funds have been around for about 10 years or less. So each of these index funds are fairly new, but also they've done quite well in that short time period. You can buy a share of this Information Technology Index. It's around $65 per share. And just so you know, that the research on these investments on this spreadsheet was done around 7/18 of 2019. So July 18th is when I pulled all this information together. There is a small dividend yield of 1%. Expense ratio is the same as the last one. What companies does this thing hold? Let's scroll down over here. We see that this thing holds Microsoft, Apple, Visa. So every time people are swiping that credit card, this thing's making money. Cisco Systems, MasterCard, Intel, Adobe, Oracle, PayPal, IBM. And it has 300 holdings in all, 325 holdings in all. So you get great exposure to the information technology sector, as well as getting diversification, just like the other ones. Fidelity, according to their analysis, or whomever they're using here for this analysis, they think the technology fund is going to excel even further into the future. I know we're going kind of fast, guys, but that's on purpose, because I want to make this video as short as possible, but deliver the information that I think you need to hear as quickly as possible. Real Estate Index ETF is the next one that has been performing outstanding for 2019 with a 22.5% return. Excellent. 1-year return is about 15%, and this thing has been around for less than 5 years. So what you're going to find with FREL, or FREL, as I call it, is, let me go to the tab, is it's basically consists primarily of real estate investment trusts. That's what this thing holds. And real estate investment trusts are companies that hold properties, and they are required to distribute by law 90% of their earnings to their shareholders. Okay, so 90% of the earnings from these rental properties this thing holds have to be distributed to the shareholders of these companies or these ETF. So what you're going to find, because of that, this thing has a higher yield, and its yield is 3.05%, which is not bad. And let me scroll down here. It's only $27 per share right now, roughly, as of July 18th of 2019. And if we go down here, we can see its top holdings. So this holding is good for somebody who wants income. Okay, this is one of the ones I would recommend. It holds American Tower Corp, Crown Castle International Corp, Prologis, which I don't know what that is, Simon Property Group, Equinix Inc., Public Storage. Here in America, we like to fill our garages full of stuff and just have more things than we need. So what do? We need to stick it in some place like Public Storage. So it holds that, which has a monthly rental income from it. Welltower, Avalon Bay Communities, which has done very well over the past 4 years. I think it's doubled or tripled its value. Equity Residential and SBA Communications Corp. And as you guys can see, 95% of these holdings are invested in real estate investment trusts, just like I mentioned a moment ago. Long-term sentiment is strong. So Fidelity thinks that over the next 2 years, this thing is going to continue to do well. Maybe not so much in the next 9 months, but in the long run, Fidelity is rooting for this one. They think it's going to do well. So the competitor, if you want to compare this against Vanguard's version of this is VNQ, and you can see how they stack up here. One thing I forgot to point out is that you'll notice it says buy online commission free. If you want to do your investing through Fidelity, there's many investments through the platform you can get for free, so that every time you place an investment, you're not incurring transaction fees, which is nice. But you don't have to. You don't have to invest in Fidelity, or you don't have to have a Fidelity platform, I should say, in order to invest in these things. You can use any platform you want to participate in these different sector funds. The last ETF I want to cover with you guys is the Industrial Index ETF. So last year they had a 23% rate of return, which was fantastic. 1 year return, the year to date. 1 year return is about 10%. 5-year average is 9%, and lifetime return so far on this ETF is 10%. The ticker symbol on the Industrials Index is FIDU, and there is a small yield on this of 1.63%. Small, but at least it's something. And who is involved? What are the main companies that make up this sector and this ETF? Well, some of the main players include companies like Boeing, Honeywell International, Union Pacific Corp, United Technologies Corp, Triple M, Lockheed Martin, and Lockheed Martin is the largest defense contracting company, I believe, in the world. They make weapons, they make those cool F-150, or the fighter jets and all that stuff. That's what they make. General Electric, I almost said F-150. No! Caterpillar, UPS, or United Parcel Service, and CSX Corp. And there's 341 different holdings with this. So there's a lot of diversification here within this. Who's its main competitor on the Vanguard side? So if you want to invest in something similar, if you're a Vanguard investor, look at VIS, and FDI or an FIDU for Fidelity. Industry exposure. So the industries that are part of this sector fund include aerospace and defense, machinery, industrial conglomerates, road and rail. There's airlines, there's transportation infrastructure. So there's all these different industries that make up this industrial sector. All right, so that was a quick overview of the 4 of the best performing sector ETF Fidelity funds of 2019. So I hope you guys found that helpful. Remember, like I said, make sure you click the blue links over here. You're probably going to have to create a customer login as a guest in order to see them in more detail, like what I'm showing you here. Because in order to get these graphics and visuals, I had to create a guest login account. So I think you're going to have to do the same if you want to research this more. But I just want to convey a few final thoughts here that I think you should take into consideration with these things. So what I found, now I've made several videos on ETFs and mutual funds and stocks and investments in general, and I will continue to do so. But what I found is that, in generally speaking, that some of the best investments are the best type of ETF sector funds to be invested in are information technology, consumer discretionary, and the healthcare industry. What I've noticed is that over the lifetime of these different funds, in terms of how long they've been around currently, that the information technology sector fund is the best performer. And that's typically true what I've noticed with other investment platforms as well. Even with Vanguard, I typically find that information technology is almost hands down over the last 40 years, the way to go if you want to achieve the highest rate of returns. It's just like you would put the money in and forget it. And that's what's nice with these different ETFs and sector funds, is that you can not only get good knowledge, a good grasp of what makes up the stock market, what sectors make up the stock market, what companies make up these different sectors and industries, and you can easily diversify your portfolio this way. And if you want to have something in addition to the S&P 500, sector funds are a great way to do this. If you're looking for income, I would definitely look at the real estate index ETF if you're wanting income. If you're looking for income, I would look at the financials index ETF. Usually those sectors offer higher yields. You might also find decent yields within the utilities index. If you're concerned about where the stock market's headed in the next few years, definitely look at consumer staples. I think those can do well if our economy turns south. Right now, we're breaking all-time record highs in the stock market, but who knows how much longer that's going to last. This bull market has been going for like 10 years strong. I don't know how much longer it can last. So if you want to hedge your bets, I'd look at consumer staples, because consumer staples, and this is FSTA, holds companies like Procter & Gamble, Coca-Cola, Pepsi, Walmart, things people are going to need in a good or bad economy. The other thing you can look at in terms of hedging your risks there, if we have an economic downturn, is look at sectors like utilities, which is FUTY. So let me go down here to FUTY, and because regardless of what our economy is doing, good or bad, we're going to need services. We're going to need energy, gas. We're going to need electricity or water, all those kind of things. So I think look at utilities as well. And historically, utilities hasn't done that bad. Utilities right now is lagging this year a little bit, but historically they offer on average about a 10% rate of return per year. So it's not bad. And plus you're going to get somewhat of a dividend yield usually from utility sector as well. These sectors that have lagged this year, or in the past year I should say, definitely energy. Energy has been hit hard. I know oil has been much, much lower for years now. And that's a big part of why energy has lagged, and especially as we're transitioning from fossil fuels more into renewable sources of energy. So there's a lot of changes going on there. So look for that. So I think the energy index fund is still, that sector is probably, you can still find a lot of value there. However, I'm not sure when it's going to rebound. It's been down for quite some time, but something to keep your eye on. The other thing to keep your eye on is the communication services index. A lot of the big tech companies have moved over from the information technology sector over to communication services. Let me show you what I mean real fast with that. And it's FCOM. So what you're going to notice now is over in these communication services, you now have companies like Facebook and Google, Disney, AT&T, which it used to be there anyways, Netflix, Comcast, Verizon, companies like that. So that's what you're going to find. If you want to invest in these kind of companies, if you really understand them, if you like them, then look at the Fidelity Communication Services Sector ETF. Last thing I want to point out real quickly is that look at the Healthcare Index ETF. I've noticed they've lagged a little bit. They usually do better. And over the past 52 weeks or the past year, they've only gone up about 5%. But be looking at that, because I think there's a lot of growth potential in the future for the healthcare index fund. I think what holds it back is there's still a lot of uncertainty with how insurance is going to play out. I know the current administration is looking to change how we go about healthcare in America, and the party after that's probably going to look at that as well. But there's the pharmaceutical companies, there's hospitals, there's the, like I said, the big drug manufacturers within that, medical equipment, medical services. That's what makes up this healthcare ETF. Definitely health insurance companies. So let me just go to that real quick. FHLC, and you're going to see that, here we go. So Johnson & Johnson, major drug manufacturer and medical supply company, United Health Group, Pfizer, which I own, Merck, Abbott Laboratories, we have AbbVie, all these different companies that make up this healthcare sector, about 364 holdings in all. So that was a quick and dirty rundown of these different sector funds. I hope you guys found that helpful. Like I said, make sure you consider these in regards to your other investments. Don't over rely on one given sector. But definitely you can learn from these different funds and learn more about the companies involved with them. That's really going to help you. All right, ladies and gentlemen, I'm going to wrap up the video here. I hope you got a lot out of this. I hope this gives you a good overview and were able to get the information you need all summarized in one place. It took me a couple hours to produce the spreadsheet, so I hope you guys found it valuable. It's completely free to make sure to download it. If you enjoyed the video today, make sure you hit the red subscribe button down below to not miss any of our future uploads, and smash that like button. I'll see you guys down in the comments. I look forward to reading everything you have to say. Until then, have a great week and live your life uncaged. See you in the next one, guys. Peace.